All right, greetings fellow traders. Welcome to our every once in a while update. Today is Friday, November 15th, 2021, and I'd like to go over a trade with you today, one that we've actually been stalking. Well, in our live room we pretty much trade everything, but this one here we've been stalking and shorting it for the past 17 days until we got to this target area over here. And I want to go over this trade with you and why you should possibly be looking at the CAD Swiss franc as something to add to your trading arsenal and how we view it. We're looking here at the CAD Swissy right now on the monthly. And if you notice, we've been going sideways for a very long time. Over here we had a triangle on the weekly charts that had to be redrawn a couple of times. But it's pretty hard to imagine that something can just go sideways for forever. We currently have about 6 years right now of sideways price action. And if you look at the weekly, I have to scrunch the chart up a little bit so that you can see what we were looking at. We had a triangle that was being formed in here, and multiple times it broke and broke again and again. We had to redraw this many times, this triangle. And when it fell brutally, about a year and a half, 2 years ago, down here, we looked at this as a long. And in the year, not this year, but last year, we took this thing long approximately 27 times. I seem to remember that very well. So I'll crunch the daily chart up for you so you can see it. All these lows right in here, we were buyers. We bought the lows, and many times we would hunt them on the 1 hour charts, 4 hour charts, whatever it may be. We were looking for bloodshed, basically, for the thing to just be destroyed. And when it would go down intensely and then give us a buy signal on whatever time frame we were looking at, we would take it long. And our primary, well, we believe all chart lives matter. Okay, we look at the monthly and the weekly quite heavily, but the daily chart is our guide. About 27 times last year, we longed it. This was actually our target level over here, where this is. And when we ripped up into that target, we pretty much bailed out of our longs. So we did miss quite a substantial movement. As the trade got to be just much too high, if you look back here, there's a tremendous amount of supply, and the trade got overdone. We looked at this as a short. So we shorted the trade up here, waited for quite some time. This unfortunately took like a month for it to come back down. But if you use your cursor on your mouse in your little pip counter device, you can see, the amount of pips was pretty decent, 270-ish pips roughly in about a month time. Over here, we ended up going long again. In this area, we shorted. Over here, we shorted. And then for the last multitude of times, we've been, whoops, wrong way, been looking at this long. When it came down into the 200 MA, we were long here, here. We longed here and got decimated, which was a lot of fun. This went against us by a rock-solid 130-something pips, I guess, where we loaded and loaded like crazy, waiting for the up move to reestablish itself. And the last time we took it long was over here. Now, a little more recently, up here, we've been looking at this as a short for approximately 17 days, I believe it is. Let me just double check. 18? My bad. Well, for the past, 4 days, we have not been looking short. This was our target level. And we wanted to reach this level, which took substantial time. So we were short up in this area. Occasionally had maybe 5 or 6 little slices at a clip, and our move was about 160. When we reached this area, we were gone. Now, I don't know if everybody is using the same things, and maybe you have a different chart system that you like to look at. I don't know, candlesticks, I believe these are the footprints of money. They're very important to focus on the candles. When they're red and they're trending down like this, that's a downtrend, right? And every trend, every good trend comes to an end. We know that. And the trend can't go on forever. before hitting something that is supportive and people get interested once again to buy. So some of the tools that we use is, number one, this we call total view, where we can take any chart and drag it and drop it, like pound New Zealand, for instance. We can just drag it and drop it on the 1 minute chart. Boom, loads up on all 6 charts for us. It just helps us to see all the time frames at once, which I really like a lot. So that's one of our tools. Another tool that we like to use is just the candles, the footprints of money. And when we really got hot for this thing short, we noticed that it had broken the resistance area that was up here. Right? This was all resistive and looks like a great land for stop losses for people that are short. You know, I'm figuring they're gonna stop out there, which we thought was pretty good. So we like to see other people get roasted first, you know, before we end up getting a heavy idea for shorting. Another tool that we like to use is the common fibs that everybody else in the world knows of. A lot of traders don't use these, but the 786 and the 886 fibs are one of our really favorite tools. We love it when we get to a 786, 886 magic fib box. Another one you might notice is we have this SHI channel indicator, which is just like a fractal finder on our charts. And it will tend to locate, you know, highs and lows of channels. Another one, which we love, is the stochastics. Now, long time ago, maybe 10 years back, I chatted with 10 bankers for a full day, and they all told me, use those stochastics, put them at 10.33. So I was using them at 8.33, and I did actually test it at 10.33 for a couple of weeks, but I noticed very little difference. I mean, just 2 more. It just didn't make that much of a difference. So I'm sticking with my 833 because it's more akin to the natural flow of the market on the lower time frames. But who knows? Maybe on the daily it will work more better to be 1033. But whatever you use, 1033 or 833. I think that is pretty much enough. And the basic idea, of course, being that when they are lifted like this, we know that in time they're going to cross over, they're going to point down, and then they'll take some time to run. So one of the things that we don't do is we never like to buy when the stochastics are up here like this. If you can look where my cursor is, we never want to purchase tops. But again, we never want to short bottoms either. So all the bottoms here we don't short, and all the tops we don't buy. So here we've been short for approximately 17 days. Now on the lower time frames, if we jump into a different chart, here you're looking at that same 17 days. This is now 4 hour. And one of the things that we like to use is the Guppy multiple moving average, which we use extensively, quite a bit in our live room. And when we are very far away from that multiple moving average indicator, we like to be short in the tops of things, waiting for it to crash and crash back down into this investor trend. But every good trend, you know, like I said, every good trend comes to an end. And if you look at the chart here, you can see this uptrend, extremely long term, and the waves are in place, you know. And then over here, we're anticipating this, what we call the build process, where the trader trend will crunch up and go through the investor trend and eventually start overshooting down, you know, substantially overshooting, stair-stepping its way down. So over the course of time, what we did is, well, let's see, I can't get my screen sharing. My drawing tool's not popping up for me. Okay. Well, I was going to grab it, but it's not working. So you'll just have to follow along with my cursor. We short in areas like this, and when it tanks really hard for whatever it may be, you know, a day or 2 days, we tend to bail out. We're looking for reshorts on lower time frames, right? 15-minute, 1 hour, etc. And we're looking to reestablish those shorts and carry it lower. So we reestablished shorts up here. And when it fell very hard, of course, we were out. When it rocked again, we don't give up. I mean, we don't just say, oh, okay, you know, trade's over. We don't do that because we're looking at the daily and thinking of our longer term goal. So we were in this trade multiple times over the course of those 17 days, or whatever it was altogether. And ever since this point here, roughly right around here, we've not been looking short anymore, but instead we've been looking long. This is still in place. We have a good trader's trend. We have a good investor's trend. We're, obviously below the 200. We're below the 100, and it's looking fairly bearish on the 4-hour. It's looking pretty bearish on the daily, but again, using our fib tool, the most recent low to the most recent high, here we are at the trader's self-fulfilling prophecy where everybody's looking for that, 382, the 50%, and many traders are even looking for the 618 level. If we run another fib from this low over here, we can, oops, I got to get it to line up just right. We see that we have a fib confluence as well. You can see the 50% and the 382. So that lended a little bit more towards our bullish mindset. All right, now let me get rid of these fibs because they're just going to be in our way. And going back to the 4-hour, we can see that in the last 4 days, we have had good moves up. And what we were doing is buying on the lower time frames. So I'll go to the hourly chart just for now. You can see, and we can do a little pip count to see how much pips from swing low to roughly swing high. This right here wasn't that much, it was only 46 pips. And over here, oops, again, 40-something pips, right? And then over here, where we reestablished longs again, we had another good thrust up of about 40-something pips. So these were the trades that we took in the last few days being long. And even now, it's coming down one more time, and we're just about right. Well, the weekend is here, so we can't do anything right now. But going into Sunday and Monday, of course, we're going to be thinking about getting long. So when you weigh all of this out together, okay, the monthly chart, which is incredibly sideways for so many years, we're anticipating a future move up above all of this and above these areas. And potentially, this may take considerable time. We could be looking at years before we get up here. The general idea for us is that over the course of a year or two, we could move as far as something like, 1,200 and, plus pips. But we know that that will take massive quantity of time. It's not my game to, just get long and hold a trade for 2 years. I'm not about to do that. So looking at the weekly, it is still quite red, and it could go lower. Remember, there's a 618 fib down below. Looking at the daily, we've hit a pile of moving averages that we love to use, the 100, the 200, and of course the 55 period. And again, this is still pretty bloody. It's still pretty red. So the trend is down, all right, but the stochastics are buried. So the 4-hour has not shown that it's come to its end yet. There's a certain process that takes place, and that process is not visible right now. But the hourly charts are doing halfway decent moves, even though we're bearish. Now, hourly speaking, we are under the granddaddy river, the granddaddy and the grandmommy, we call it. This here is the 200, this is the 100, and this is definitely grandpa and grandma, and they're pretty powerful. And we have the waves in place here with our, the riverbank in place with our 20 and 40 period moving average. So we're looking now at the SHI channel and thinking, well, who knows, maybe Sunday, Monday, whatever it may be, we could come down and potentially hit this level, at which point we will be looking for hourly buy signals. Now, we don't have it right now. Okay, it isn't in, we don't have one. It's not in place. But when we get that hourly buy or lower time frames, 15-minute buys or anything that we can get our hands on, what we're willing to do is to take a small position. Now, I know a lot of traders like to trade really big. I don't quite know why that is, but maybe it's a get-rich-quick mentality. I'm not sure. Maybe it's a gambling mentality. I don't know. I don't think it's a very good mentality to, just go big or go home. I'm not into that myself. I don't encourage that for our entire trade room. What we like to do is diversify our trades up into a bunch of little slices. So let's say we have 5,000 account, and let's say that our maximum position size might be something like a 0.25 or perhaps 0.30. Okay, we would slice that up into tiny little pieces. We call them bullets, small bullet. So perhaps we'll shoot bullets at 0.03 per round fired. And what we're looking to do is we're not trying to stop out. We don't have that mentality that we want to stop. Okay, don't really enjoy losing money. Don't really have a desire to stop out. So I will give you an example. Here is a 15-minute buy signal right here. Here's a 15-minute buy signal over here. You have to admit it's there. You can see it. It's not a powerful one. It didn't close all the way at the top, but it is a 15-minute buy. There's a 15-minute hammer. That was a pretty good-looking 15-minute buy, and it had follow-through for a few minutes. If we are purchasing down here, we buy a little slice, and it goes lower against us, right? We're looking to get in more, but we're not looking to get in that close either. This one here probably wouldn't even have taken it because it's only 10 pips away. It's just really not enough distance. But assuming that you went long here and took another piece over here, you can look at how long you had to hold for. Not only did you hold through all of New York, you held through all of Asia, you held through no man's land right before the London Open, and eventually it went, right? The good thing about doing small pieces too is that you can scale out as well. So if you took a piece over here and a little piece over here, and you get up this way and you start to see some kind of sell action, you can always knock one of them off. We call that reaching out and scratching the itch, right? We have a little desire to book some money. One piece out here would be okay. Taking the other piece and raising the in-the-money stop loss up. And then, over time, it really, really went. But eventually, you're going to get removed from the trade. Eventually, it's going to go away, and you're no longer long. So you might have one or two of them. Get up here, you got nothing left. Break the New York high, break the middle ground of that London. Sooner or later, you got to get out of the trade. But we don't stop there. And just because the trade has done what we want it to do, and we took, say, 30 to 40 pips at a clip, right, which is not much. I mean, add it up. Okay, 30 pips here, 35 pips there, 40 on another one, maybe. What are you at? 100 pips over 4 days. Boring, right? I know, but it's just one trade. It's just one. So we like diversification, scattering our trades on a bunch of different currencies so that no one trade can kill us, let alone hurt us. Or shall I say hurt us, let alone kill us. I got that in reverse. So what we are looking for going into actually probably the balance of the coming week and maybe even the week after that, if this thing continues to pull back and go lower and lower, we still are buyers. We're buyer-minded. The only thing is, I want to buy the lows. So looking at the charts right now, knowing that this is Thursday right here, and this is Thursday night, and this is London, and this is Friday, we're closing pretty bad. And there could be some stop losses in waiting. So based on the hourly chart, what we looked at before, my hope would be that we break this, come down lower. Love to see it drop another 15 pips before I touch it. That would be ultimate if we could see somebody else be stopped out first. And then, well, one thing we do know is nothing moves in a straight line. I think you and me can both agree on that. Nothing moves in a straight line. Even when you're in a downtrend, you still have significant times of popping and bursting forth. There has to be a recovery before you can go lower. Recoveries before you go lower. Recovery, lower. Recovery, low. So we haven't broken anything beautiful yet. We don't have a daily buy yet. We don't have a green bar, big, fat green bar closed. It's not there. And that would be nice to see because it will increase our confidence in a long position. So I hope this has been a help to you, but my major point today is just when you're doing your trading, right? Please remember, number one, monthly chart lives matter. Okay, it's very important to look at your monthly chart at least, a couple of times per month. It's very important to look at your weekly chart at least a few times a week. It's pretty important to run your fibs and consider all things. And when I say consider all things, I mean consider the correlated currencies. Like we're looking right now at CAD Swissy. We also want to look at everything with CAD in it and everything with Swissy in it. That's pretty important. The candles matter, right? Moving averages, they matter. And all time frames are equally important, just like people. There is no person above another. When you have to say blank lives matter and fill in anything in front of that blank, you're racist. All lives matter. Black, yellow, white, red, you name it. Short people matter, fat people matter, I don't care. Ugly people matter, beautiful people matter. You name it, every life matters. We're all human beings. We're all trying to make money. When it comes to the charts, all of these charts matter, and I don't view any one of them as more important than the rest. So use this if you can. Use the multiple time frames. Set yourself up. I got a lot of YouTube videos out there. Sadly, they only teach about 10% of what we know, but I can't just give it all. I can't just give it all away. If you want that, you gotta come into the trade room with us for a month or two and learn it. But we do teach it extensively. And so as you're using your charts and you're going through your trading on your own, look for the stop hunts. Look for the buried out stochastics. Try and find yourself some good buy signals. And don't be so anxious to stop out. Slice your trades up into little pieces. It works for me. Maybe it doesn't work for you, but I find it, if I just relax about the thing, eventually there's always another up move. I cannot say that I've seen the last up move in CAD Swissy, the last bullish run. Looking at the charts, you can see an awful lot of bullish runs that have happened. And even though this may not be everybody's favorite pair, the CAD Swiss franc, right, might not be your favorite. I can tell you it's not my favorite either, but it still matters to me, okay? And I don't want to miss the bull runs, and I don't want to miss even the bear runs. So everything is a bull at some point in time, and everything is a bear at some point in time, and I'm looking for these trends to come to an end so that I can get long and take it up for the next bull run. Well, I hope that's been a help to you, and if it has, please give us a like or a thumbs up or whatever that is that you do on on YouTube. And if you want to join us, I'm pretty sure that somewhere on this video there will be a link that you could give us a try. All right, everybody have a great weekend, and I wish you great luck in your trading next week. God bless. Bye for now.